Welcome to Mr. Cat's Talk. Here are 4 tips mastering the market cycle, and it could probably be used in your daily life. Before we start, the first matter you need to think is how to make an investment worthy. The power of second layer thought. The first layer thought, when people think the company is doing well, it is time to invest it. The second layer thought is that if people think it is good, the stock price may be overvalued, so I'm gonna make an ask to the remaining stocks that I still hold. When a newborn product is quite popular, most people would probably regard it as the perfect timing to do the investment in this field. Unfortunately, when it comes to the market cycle, the value of product will sharply decline owing to the new entry businesses oversupply. Eventually, those newborn corporates get dead just from its short lives. Realizing the market cycle and the psychological behavior, which are very important for you guys to understand before your investment. It is undeniable that technical analysis sometimes is useful when engaging in the investment field. Well, the other 2 factors are fairly important too, which includes realizing the market cycle as well as the psychological behavior. People usually forget the time gap. The time to engage in a certain field occurs in every business cycle, and psychologists will influence how investors think in making every decision. During the pandemic, the fast mass market had witnessed a price skyrocket owing to those 2 factors. Initially, the supply is quite stable until it confronts the panic buying occasion, which is the outbreak of COVID-19. The price soared to the sky and people keep stockpiling the inventory as the pandemic almost lost control. However, with more corporates engaging in manufacturing face masks, it becomes overwhelmingly oversupplied, which brings the price fall back to normal or even lower than its average. Third, the existence of irrational investors. It is said that assuming the public are relevantly rational when doing every investment and market information is fully revealed. However, we forget the truth that the proportion of irrational investors indeed exists in the investing market. For instance, if you remember when every certain event happened and something just lost control, such as virus, pandemic, US-China trade war, QE of the countries, which used to ease the effects of unemployment rate, and so forth. Those usually come with a certain product's price fluctuation, which is quite annoying for your purchase plan of daily necessary. It is because people's mind will first tend not to be the last one in any investment, no matter in the stock market or running a business. When this atmosphere appears, the irrationalities overtakes rationalities. This makes the price of certain products become overvalued. If you get into it at this time, you have a high chance of losing money. Fourth, understanding what is the risk. General thought is that low risk usually comes with low pay, vice versa. But in reality, risk is an extent that you are afraid of losing money, called psychological fluctuation. Where the process of investment is a probability distribution. The more extent of fluctuation you get, the higher fortunes you are gonna lose or win, with the concept of zero-sum game. In high-risk conditions, you can't ensure that you are the chosen one with the most profitable result. By contrast, you could be the most miserable investor who loses all the fortune in a stock market when not realizing the potential risk and chasing the optimistic grapevine. But how do we ease the high potential risk happen to us during the investment? You may make yourself work in the industry that you are really interested in and invest it confidentially in the field. Just like Warren Buffett has said that the most important things of an investment is buying only stocks that you really understand. More specifically, to understand what economics of business, you'll be likely to imagine its potential development at 10 years from now, or even 20 years. Therefore, evaluating and making sure that the company is within what we call the circle of competence. This is quite important for you to know before your investment. Not just understand the economics of it, but understand the competitive aspects of the business. Thanks for watching today's topic. Hope you enjoy it. If it's useful, please give it a like and subscribe it.